Hello, everybody. This is Mr. Lu. Looks like recently a lot of analysts are looking at Warren Buffett, which is selling down his position significantly and raising cash, building up his cash buffer. Should we do the same thing or should we not? Right? So today we're going to talk about that. If Uncle Warren Buffett is doing that, maybe we should consider that. So let us watch and see what I feel about the whole situation, shall we? So the title of my talk today is Warren Buffett is selling, then what should I do? Remember, this is about what I should do. I'm not telling you what you should do. And today I'll walk you through the thoughts of what are my thinking process and more importantly, what are my options. And most importantly, if Warren Buffett is selling, then is it a signal that a crash is coming? So these are my usual disclaimer. Recently, we have been warned as influencers not to give financial advice. So I've been repeatedly telling everybody this is what I'm doing. I'm not telling you what you should do. Warren Buffett, which is the Oracle of Omaha, is obviously the world's best investor. And currently his cash position right now is $325 billion. And this is a huge amount of money for an investor. And his moves are actually getting everybody very edgy because it seems to everybody that he knows something that we don't know, that maybe the crash that we are all fearful of is coming. His cash as a percentage of his total asset goes up and down. You notice that just before every big crash, his cash position as a percentage of his total portfolio is very high. So before the dot-com it was high at about 15%, and then it crashed. It bought a lot of stocks, and then he accumulates, and then the global financial crisis came, and then he bought again, right? And it goes up, and then it goes up and down, and finally, right now, is going at the highest ever, close to 30%. And is that a signal that a crash is coming? I can't tell, okay? And I got a feeling that even Warren Buffett cannot tell, but he is very fearful, and I think he should be rightly so. Remember, Warren Buffett has always said, be fearful when other people are fearful and be greedy when other people are greedy. And this is something that right now everybody is greedy and he's now fearful. So, what's Warren Buffett's reason for holding on so much cash? Could it be that he's seeing a crash that's coming, or could it be other reasons? Let's analyze, shall we? Well, the analysts are analyzing that he's probably doing what we call portfolio rebalancing, something I've been saying about it many times, that we should always rebalance our portfolio. And Warren Buffett right now is cutting down his Apple stock with value down to 60%. Another analyst suggests that Warren Buffett's Apple sale may be down to simple portfolio rebalancing. So when Apple is so big in his portfolio, he's basically cutting it down. So he's selling a lot of Apple stock. And that's very normal for all stocks. And if you see one of your counters being outsized compared to other, and you should do some adjustment to reduce the risk of it. And this is just normal portfolio rebalancing. And I've said again and again and again and again, this is a very healthy thing to do. Another reason why Warren Buffett is doing this is because if his share in a company have exceeded 10%, there's a lot of disclosure requirement by American legislation. So he's simply reducing his stake to avoid this kind of disclosure legislation. In a filing with US SEC, he has disclosed a sale of more than 9.5 million Bank of American shares to right below 10%. So with the share now below 10%, Berkshire Hathaway, which is Warren Buffett's company, is no longer required to report its related transaction in a timely way. So this is another reason why he's selling as well. But everybody is more concerned about one thing. Is it he's seeing something that we can't see, because he seems to be very very correct in guessing when a crash is coming. Well, even Buffett himself said that he cannot predict when a crash is coming, but he looks at the expected long-term returns of stocks versus cash. So he always acknowledged that he has no ability to predict when the market is heading in the near term, and including the timing of occasional big meltdown. But what he can do is to estimate how much the stocks are willing to pay over long term, and use that to estimate how much to allocate stocks versus the other asset. And how does he do it, right? He's betting on a simple principle, which is valuation and future returns are inversely related. So if valuations are too high, then future returns are going to be low. That's common sense, right? And right now, I think he's seeing some of the stocks, especially Apple, and maybe Bank of America as overvalued, so the future returns is inversely related. So my personal thoughts are these. Currently, the stock market are at a very high level, and a crash will surely come. For sure, it will surely come. We just don't know when. And not only don't know when, we also don't know how deep, how short, or how long it will be, and the frequency, and when is the next one, and the next one, and the next one, right? It could be a few months from now. It could be a year or two, or it could be longer than that. But I can assure you a crash will come. It's just that I don't know when. But what I do see is that the rebalancing strategy that Warren Buffett is adopting is a very healthy strategy, right? So with this, I will review, and I do that constantly, reviewing my portfolio to see whether I'm heavily overweighted on stocks, which obviously I am right now. And logically, I should then offload to cash and other assets, which I regularly do as well. This is where I want to highlight. Everybody is trying to predict to hold the stocks as long as just before the crash comes, right? And this chart will tell you how difficult is it to predict a crash. This is the S&P 500 over the last about the 20 over years. This one represents the dot-com crash. Before that was a huge bull run for many, many years. It could be now, because the bull run has just started in 2022, and the crash of the 2022 may be a restart. So this bull run may last for a few years, like what before we see here. But it may be, may not be. I don't know. And then after the dot-com crash, it lasted for many years, and it slowly built back, okay? Somewhere around the same level, just before everybody gets too happy, the global financial crisis came, and then it crashed terribly, right? Terribly, by 50, 60%, while everybody is doom and gloomy and things like that. And it slowly came back again. Now, take note here, crashes can be very fast, and usually the climb back can be very slow. So it crashed and crashed, but it came back, and then the China stock market crashed, and it spilled over to US a little bit, not a lot. It went down a little, and it go up again. Then Donald Trump got elected, and then he launched a trade war versus China, and that caused a market dip again. And then it go up and down. I can't remember what is this. And then COVID came. That was the fastest crash and a recovery I ever seen in my life, right? Within a few months, it recovered back to full, and it's super mega bull run all the way to the 2022 global inflation, and it crashed terribly again. And right now we are on new highs again. So you can see, right? First of all, it is very difficult to tell when. Some people say, oh, every few years there'll be one. Not quite, right? Not quite. If you look between here and here, it's about, I would say, eyeballing about 8 years. Okay. Between here and here, okay, maybe 8 years seems to be. But between here and here, it's not 8 years. It's much shorter than that. And between here and here is what, 3 years or 4, and between this is 2 years, right? So it's really very difficult to tell. You can't tell the time interval. Some people say that, oh, Mr. Lu, you can see last time crashes take a long time to return, but nowadays crashes come very frequently. Is there some truth to it? Maybe, because nowadays things react so fast because of a rapidly changing environment, right? But I would say that it is very difficult to tell when, and it's very difficult to tell the time interval between crashes. And what is worse is that, a lot of people try to detect the signal before it crashed. I would say this, I've never succeeded in detecting a crash easily. Arguably, I sort of guessed this one, but it was really very tough. And before the great financial crisis in 2007, I started selling in 2005 or something like that. But I only sold some penny stocks and left all my blue chips, which also crashed. So it's really very difficult to tell. The signals of a stock peaking is very difficult to tell. So ideally, we all want to let it run. Just before it crash, you sell, right? I would just say it is near impossible. Okay, near impossible. I don't even think Warren Buffett knows how to do that. So it is very difficult to time a crash. It's much easier to time the bottom. And I've done it repeatedly again and again and again. So this is where I want to share everybody that this is for me only and not for you. So which means that I have to live through the ups and downs. But I must say, even for myself, it's very painful to see portfolios going down by 30 to 50%, sometimes 70%. So you got to have what I call tahan ability, right? You have to be able to withstand this kind of drawdown. And I say again for the 50 or 100th time, A crash is coming. I just don't know when. It could be a few months, it could be a few years. I don't know when, but I can assure you a crash will come. Now, I have two options, right? Number one is what I generally used to do in the past is I will just buy during the crash and hold and ride through the peaks and the trough. And I will say this from experience that it is very painful to see your portfolio go down by 30 to 50% and gradually you recover. Yes, most of the time I live it through. I've demonstrated the 2022 one. I let everybody know my feelings. I, in fact, try to inspire tahan ability and I try to demonstrate to everybody where I'm going. Okay. And I also need to say again, I've never tell everybody, please follow me or you can follow me because I know it's very difficult. But that way of holding means you got to endure the ups and downs and not something people can easily do. The other one is to consider rebalance like what Buffett is. One third of his portfolio is in cash right now. Close one third is a good yardstick to consider. I haven't done a review right now where my position is. I do it maybe once a quarter or so. And if indeed one third is a good guideline to take a look, no, which I'm going to take a look as well. But I do regularly rebalance some of them, but I don't think my ratio is anywhere close to one third. But this is a good yardstick to consider. So I would certainly consider this as a good yardstick for me to work towards. The stock market journey is one that is full of ups and downs, and the winners are few and the losers are many. Usually those people who wins are people who can hold on for a long, long period of time and ride through the ups and downs and pick the right positions to take in. So for me, I've largely preferred to buy and hold it for a long period of time with small positions or rebalancing. But this is what I'm going to do. So what will you do? I'm happy to hear from you what you'll do. Please share in the comments or join us in our Telegram group in 1M65, Lu 1M65. I'm happy to listen to some of your comments and thank you for watching. I'll see you in a day or two. Bye-bye.